Hey, folks, welcome to Market Intraday Analysis by InTheMoneyStocks.com, your leaders in pure technical analysis, avoiding all that Wall Street hype. This video for Monday, November 28th, 2011 is brought to you by Realtic. All right, guys, we're going to get right into the mix here today. The market's having a monster move higher. Nasdaq is up 85, S&P 500 up 35 points, and the Dow Jones Industrial Average up 305 points, basically 3% across the board. Now, the key here is to recognize, did you get on the long side late last week? Because if you didn't, you missed out. There was no way to buy the market today. If you look at the market today, you opened right here, and you've basically gone sideways all day long. So there was no opportunity if you bought today to make money on the long side. However, if you were a member at In the Money Stocks last week, you know we accumulated longs all around the board. SMH, SPY, JP Morgan, just to name a few. Buying these stocks up late last week as the market was cratering into support. The rest of the world, CNBC was a leader here. They were so bearish, folks. So bearish. Spreading doom and gloom. The average investor jumping off the window ledge, thinking the market was going to come crashing down. If you read the charts, you know exactly what's going to happen, and that's exactly what we did. We knew the market was going to bounce. Sure enough, today a massive bounce. Profits are pouring in again. The crazy thing about it is this. Check this out, folks. Early last week, I was moving out of my shorts with the Research Center members here and the Intraday Stock Chat members. And then by late in the week, we were accumulating longs. And we made money on our shorts early last week after holding those for a week or so or a little less. And again, we're making, after just holding for a couple days here, making money on the long side. You can do this. Just read the charts. We teach you how. We give you our exact trades, our exact entries as they come in. Join the Research Center. Join the intraday stock chat at inthemoneystocks.com. All right, let's talk about some charts here. Markets opened just above the 200 moving average. That, again, is a little bit of what we call a river theory, which stipulates the market should hold its gains and possibly even inch up over the course of the day or the next couple days. And again, you can see that the market has held those gains. And again, a river theory, just to quickly explain it, is a gap above major levels. Obviously, you have the two moving averages here and the 200 there. We gapped above that. That basically puts a nice floor in the market because you go above so many key levels. It's tough for the markets to go back below those levels. And that's exactly what we're seeing here. So again, today, sideways consolidation day after a gap up. Notice how we came up into these two blue lines. The two blue lines match up perfectly with this pivot high right here, and if I zoom out a little bit more, gap window and pivot high right here. So these two lines here matching with this point and this point here, it gives you the exact high of the trading day. This is exactly what we thought. We thought the market would move up into here and kind of hold steady. It's up so much today, it's hard for us to imagine it going much higher. But the key is, over the next few days, I do think it will inch a little bit higher as well. I do think we have a little bit of a rally. It's not going to be a big rally. I talked to the Research Center last night in the No Hype Live broadcast, which you get if you're a Research Center member. Again, you get the No Hype Live broadcast, the hot charts and alerts with real live trades. You get the nightly videos every single night, 30 minutes in length, the daily market reports, technical tactics, and obviously rules of the trade and other things are all included there in the Research Center subscription. 7-day free trial, folks. Very simple. All right, in any case, markets, again, you can see are floating up here a little bit, but it's still a sideways market from the open today. And again, if you weren't long from late last week, you're not going to make any money. Again, lucky for us, we could read the charts, position ourselves, and reap the profits today. All right, now let's go to a couple other time frames. Let's go to the daily chart here. You can see the daily chart came right into our support area, and right here is your X factor. That's your X area of major support. Gap window, gap fill right in here. The market comes right into that level. This is where we started to accumulate right down here. And look at the move up today. I mean, this candle today is humongous. Look at the size of that. It's almost going to the gap window right here. Essentially did go to the gap window. I do think you get a little bit higher, probably to the 50 moving average and possibly even to gap fill right up here. This is your overall upside area here. So again, the spiders could probably go to about the 122-ish level on a continued move up for the rest of the week. I do think 122 is not too far-fetched to see us hit that. Too much higher than that, I don't necessarily know about. Okay? All right. So let's see what we have there. Let's go to the dollar chart. The dollar chart's actually kind of interesting today because the dollar is down, which gives us a good indicator that the market would be up. But at the same time, the dollar has slowly floated up a good portion of the day. And that has kind of kept the market going sideways, but it hasn't pushed the market down like you would normally think. And I think that's a very key little factor here, is that usually a slowly floating up dollar would be pushing the markets down more. It's not having that effect today, which is telling you there's a lot of short covering going on in this market. A lot of people got caught with their pants down last week. And again, obviously, we weren't one of them. We're on the profiting side, but let's be honest. I mean, how many people out there were fully immersed in fear? CNBC was spouting gloom and doom all week last week. It was at a crescendo level. And what happens? Markets ultimately go the opposite way. You got to learn this stuff just by reading the charts. So simple. All right, let's take a look at gold and silver here. The GLD up about $3 today. Great bounce on the GLD. You still have the longer term in spirit of bear flag, but you are back above the 50 here, so you have to think that the GLD may go up to the 20, moving up here in this range about 169 or so. SLV is also getting a nice pop today. This is still consolidating though. As long as it stays below these two moving averages, I would look for a short right into this area right over here, right around the 32 to 33 level. All right, if we take a look at the USO is also having a good bounce, although a little bit off the highs. Here's your intraday chart of the USO. You can see it faded quite a bit early in the day. Now it's coming back with a vengeance, though. It really is coming back nicely as we get close to the spot crude close for the day at 2:30. Electronic trading will go on after that, but that's about it. You are seeing it rebound just a little bit, and it's having a good day either way. Very, very solid day. If we go back to the daily chart, you can see it fell here, and actually, believe it or not, this is one of the plays that we were short early last week and the previous week, making money on the downside on the USO, and then we moved out, and sure enough, you're getting that nice little bounce back, so it was a perfect execution on that play. All right, looking at a couple key stocks out there. Apple Computer up about $13. Look at how it hit the 200 moving average. Beautiful hit of the 200, getting a bounce. Amazon.com on the back of retail sales, guys. Retail sales obviously very, very good. Cyber Monday is today, so it's not surprising to see this chart doing very well as well. Up $12 on Amazon.com. In addition, you can make a case here that, look at this. If we just draw this line in here, you kind of come right in this area. You got below it on a closing basis on that panic on Friday-ish, but you never did confirm it. And confirmation is another proprietary technique you want to learn here, which will tell you if it's a true breakdown or a fake breakdown. All right, and just going to a couple other charts. Chevron today up over $3. Beautiful bounce on Chevron. Exxon's also having a big day, and sure enough, J.P. Morgan having a good day, up 93 cents as well. Financials are the one thing you want to kind of pay attention to here, folks, and this is the one little thing I'll end the video on. Financials are not holding up as well as you would perceive considering the size of this rally. And that does bear watching, I have to say. That really does bear watching. And look at this chart of JPM. The market has essentially gone sideways like this, and JP Morgan has gone sideways to lower. Now, it's still having a good day, but percentage-wise, you would think it would have a little bit better day than this. Okay, so that's just something to keep in mind and kind of keep your wits about you on in regards to JPM. All right, enough said, guys. Again, come to inthemoneystocks.com. Take the 7-day free trial to the Research Center, to the Intraday Stock Chat. Join the pros. Join the elite traders that are mastering the market on every swing. They're neither bulls nor bears. They're making money by buying the market one week and selling it the next, or shorting it one week and covering it the next. That's all we do here. That's what we're doing. That's how we're profiting so consistently in this environment that's so whippy. Most traders out there have lost their head. They've lost so much money. Institutions, hedge funds, you name it. Here we are just consistently, okay, let's make 5% there. Okay, now 5% this week, 5% that week. Over and over again. Rinse and repeat, as I always say to my members. Take care, folks. And again, come join us here at inthemoneystocks.com.